Hello there, Matt. Nice to see you. I'm Tom Meyer, President and CEO of NorthX Nickel Corp. We're a nickel-focused exploration and development company focused on high-grade nickel sulfides in Canada.
Hello, Tom. Good to see you again. Since we've seen you change your name from Archer to NickelX, we won't do any gags about missing the target with Archer. Why the name change? Why the rollback? Is this just new beginning?
It is, Matt. It's a new beginning. It's a reset. And the NorthX Nickel name change from Archer is just to put nickel in our name. We are North America and Canada, so we want to have the North in there. And the rollback is just to get the further alignment and tighten up the share float. And that was all part and parcel of a financing that we closed in mid-May. That brought in about 2.3 million of hard dollars into the register. So tighten up the float, rebrand, reset, and we're ready to go.
Okay, great. Because remind people what you've got. Because with Grasset, you picked up an asset was spun out of Wallbridge. At that time, valued around $50 million. Nickel market, very different space at the moment. Canadian junior equities market, very different space at the moment. It's a lot tougher out there. What have you got today, and what are you going to do with it? That's kind of what I want out of this conversation today. So maybe give people a summary of that.
Yeah, so the nickel assets that we picked up from Wallbridge were valued at the time of $50 million, approximately. And it was at a nickel price that was almost twice of where we were at today. We're a little over $7 and change per pound of nickel. And we were well over $15 when that transaction was announced. So a very different nickel market. But it's a phenomenal portfolio. The flagship asset is the Grasset nickel project in Quebec. It's in the Abitibi. It's off the highway. That has a 43101 resource of 5.5 million tons at 1.53% nickel equivalent. So from a contained perspective of pounds in the ground, that's about 190 million pounds of nickel equivalent in the ground. So that's Grasset. That's the flagship. And then we've got a very large portfolio in Sudbury. So over the last year and a half and taking over these assets, we've had a discovery at Grasset, which you call the H1X Discovery Zone. And that is shaping up to be, we're looking at almost mirroring or call it doubling the resource at Grasset as we further along the drill program. And then within the Sudbury portfolio, that was all about going back and looking at the data. We've done some geophysics. We're going to continue to do some geophysics before we start poking holes in the ground. But we can get into the details, but we've got some just amazing targets in that camp, which is a fantastic place to be.
Right. And I guess people are going to, okay, I know you raised some money, but it wasn't a bunch of money because you don't want to, it's kind of quite dilutory down at these levels. You're sub $10 million market cap today. But you need to be able to talk about advancing and moving the story along. So what are you spending that money on specifically?
So that's a good point. We wanted to minimize dilution as best we can. So we did cap that financing, which covers about 12 months of overheads and allows us to do a lot of the geophysics and desktop work that we're in the planning stages now. And then we put out a press release a few days ago, which is outlining what our next steps are going to be before we formally announce the program. So we're lining things up and just de-risking a plan to execute beginning in the fall and into the winter months.
Right. So I guess it's covering salaries, right? So for people who can actually do the desktop work to actually work out what you need to do next in terms of drilling. So that's going to suggest there's more money to be raised. So can you talk about that process to that point where before you raise money, how long have we got?
Oh, so the runway for the hard dollars that we have to cover the overheads covers us for a little over a year. But the planning work, that detailed work that we're doing is going to line up the scale of that program. And we did part of the financing that was completed. We had to scale back the amount of orders that we had in the book because of i.e., mostly limiting the dilution. So we've got some demand that's waiting, and so what we're planning on doing, and in Canada we have Quebec flow through charity, which allows us, and the premiums are still robust. They're not as great as they were, but we can raise flow through dollars, charity flow through at a premium, and again minimize that dilutive aspect of a capital raise.
And what are the other options to you? Because again, we've spoken to lots of different types of metals companies, right? So if I look at most recent conversation, uranium company portfolio, like you, but they would look to JV and spin out some of those projects. And I get other people's balance sheets to actually spend money on those projects to advance them because they could stand alone. When it comes to nickel, you've got high grade, so there's, I guess, the potential for some standalone projects. But in your portfolio at the moment, do you know enough about each of those assets to be able to begin those conversations, use other people's money in a kind of, again, non-dilutory way?
Oh, no, absolutely. Certainly with the flagship at Grasset, which that's 100% owned. But we have a large portfolio in Sudbury, and in fact, we got 37 properties in Sudbury. We can't get to them all. Part of the work over the last year and a half has been digesting and understanding and looking at the opportunities with a new lens. Wallbridge, they pivoted towards gold, so nickel was not a focus towards the end. And there's a tremendous amount of data that we've analyzed and then done some follow-up work. But we were at the point where we can, if we so choose, at the right time, at the right price, a JV or call it a portfolio optimization within that Sudbury camp. So that is kind of part of the hidden value that is contained currently, again, versus our market cap versus the valuation of the assets at the time of $50 million when this transaction was announced, when we took them on. There's a big disconnect. So the market value not reflecting the fundamental value, and it's at that right time with that right partner or that right opportunity when we can look to proceed to optimize. I think the Sudbury portfolio is clear on that.
Okay, but it's going to take a bit of money to kind of get that, right? To kind of get groups in, meaningful groups, not just people who want to kind of give it a go and raise some money and give it a go, but there's still a fair bit of work to do and a fair bit of money to be spent by you and a fair bit of time to be for you guys. So what are the options at the table for you in a market like this? Is it royalties? Is it, I mean, what are the alternative financings available to companies like yourself at the moment? So
the royalty for longer dated non-producing assets, I don't believe it's the market for those, and you can look at many of the royalty companies and how they're looking and chasing the different royalties that are out there. Production assets get some value. So the royalties for us, in my view, is not of value accretive. They're dilutive at this stage. But in terms of the dollar value, so Grasset is one thing through drilling. The Sudbury portfolio is mostly the geophysics that we have completed and collating the data that as we have been doing for the last year and a half, so that the data sets are quite rich and robust. And I think what makes our portfolio in Sudbury kind of unique is we're focused on larger industry significant projects, which by definition, like if you're looking at terms of tonnage of numbers, like 5 million ton resources or more, high grade nickel, those targets are deeper, and that allows us with our geophysics, when you're looking at a target of that size, to have a more likely chance of seeing them through the geophysics and then following up. Again, an iterative process before you start doing some deep drilling, and because of let's call it the size of the prize is so significant that it would likely be a very cash rich entity that would want to partner with us on the program in the Sudbury camp. But Grasset is the focus. The Sudbury is in the it's in the background. It's there. It's moving forward, and it's moving forward at a pace that is not capital intensive from a dollar perspective. But there is still a lot of value that can be added through that work.
Right. And with obviously the grade sounds attractive, it kind of attracts the headlines, but it's that scale that you're looking for at the moment. So, and that means drilling, and that does mean spending money at a higher rate than you are at the moment. So, again, with the work that you've been doing, are you going to make an announcement to the market about how you get after this, or was it just a case of let's raise some money, get some drills turning, see what we get?
No, well, so again, two tracks for in the case of the Sudbury, we'll be announcing in due course, like what we have done in terms of some of the announcements on the geophysics, and more work to follow, and the work plan to give the market. Again, these assets have been to a large extent buried for the last at least 5 years or more. And again, new lens of looking at these things. And so there's not a significant amount of dollars to be spent in Sudbury. But when we look and start considering what we need to do with Grasset, we can lay out that we've got proven geophysic targets that are right and ready to be drilled. We've got some basotil sampling that is going to confirm that this is the right location to drill, and there's some follow-up work on that front. And then there's just follow-up on the H1X Discovery, which is essentially I would call it a low-risk drilling program, in the sense that we have some solid ideas as to where those drill targets will be, and the likelihood of adding more nickel units with that program is going to be quite high.
It's kind of interesting, though. If you think, usually a discovery is a sort of game changer for a company, right? Where it makes the first discovery, second discovery, whatever. People kind of take note and go, "Oh, the potential, the blue sky, the upside." You didn't get that. You didn't get that reaction with X1. So there must be sort of arbitrage or some sort of decision or discussion at board level. You go, well, actually, if people aren't going to react to that, then maybe even if we do an efficient process of drilling, an efficient plan of attack on that project, maybe it's better to go all in, double down on Grasset. It's got its 5.5 million tons of indicated resource. It is high grade, and maybe if we can just double that, say in the next year, that's going to give us the attention that we need, because all of a sudden that feels like an asset someone might buy or someone might fund to get after properly. So managing portfolios down at this level, sub 10 million market cap, is hard. You got some big decisions to make. So can you share with us some of the thinking and decision making there?
Yeah, and Matt, you just laid it out perfectly, and that's how we thought about the approach to the strategy to date. And again, the ongoing work in Sudbury is kind of at a pace that's appropriate for the dollar spent, but the focus has been on Grasset and looking for the opportunity to double that resource, triple that resource. The magic number, if there is a magic number in the world, is 200,000 tons of contained nickel at close to 2% nickel. That's the ultimate. That's the size of the prize. That's what we're chasing. So we're a little less than halfway there at Grasset with the 43-101 resource that we have. The H1X Discovery, which is very interesting and very exciting, because it sits right below, if you were to look at strategic, when these, in our view, when these deposits were originally laid down, the H1X Discovery is right at the base of the flow. And the H3, which contains, it's a horizon of nickel that contains 98% of that 43-101 compliant resource. We're targeting the one right below it, which is in all likelihood the source of all that nickel. So there's a very high probability that we could double, and not to sound too promotional, but a pretty good probability that we can double that resource just by the continued focus on the H1X Discovery Zone. It only sits about 500 meters from the H1 horizon, the original horizon that was defined in that 43-101, which only contains about 2% of the resource. So I would recommend going to our website, looking at some of the sections, looking at the longitudinals, and you get a kind of a picture to say, okay, that's an obvious place to drill, and that's what we're that's what we're pursuing there.
I'm trying to work out how people are kind of reading this. Obviously, the market's pretty tough for nickel. They say that the price is half of what it was when you did the deal. It's sitting at 1650 or so, 1700. 17,000 at the moment, with an expectation that it will come back at the end of the year. But with the Chinese market off, I think that's affecting a lot of metals like copper as well, stainless steel, less demand for that, inventory levels up. You're getting that kind of thematic applied across all companies, right? And you're one of them. But it also feels like there's still some legacy issues. I guess hence the name change and. Hence the rollback. Exactly. I think that helps. But do you feel that people just don't understand the Grasset project enough and the potential of it because nothing happened previously when it was within the Woolbridge banner for so many years? They're focused on gold. Fine, fair enough. But nothing happened here. No one knows this. No one understands it. What do you put it down to?
There's that legacy aspect to it, certainly. But I think there's just the attention, the focus on the space hasn't been there. A lot of our peers, whether in the Sudbury camp or elsewhere, have not got the attention that they deserve for moving their projects forward. So the market attention with the kind of the downdraft in the nickel price hasn't been helpful. And then in the case I guess I have my biases, but in the case of nickel, it's a tougher commodity to understand for many investors, and that's the opportunity when you look at these disconnects between where the value was when this thing came out at $50 million and where we are today. It's the understanding of when you look at the grade, you look at the tons, you look at where the project's located, you look at the metallurgy, and when you start going into that detail and scraping and understanding, then you could see what that opportunity is. So the legacy is just, I believe, just with the price, falling away on the commodity itself, that lack of investor attention, that lack of investor interest, and then just seeing that you've got this tremendous opportunity because of where the value is, and there's tremendous value in the sector. But
it's hard, again, hard down at these levels, because if you haven't kind of got the interest in this sector, you haven't got interest in exploration. What's the role of industry in all of this? How do you, even at these early stages, I'm thinking about constantly about how do you survive, quite frankly, is what a lot of companies have to try to do, stay in the game. And, we've seen a few people kind of change their business model, their business plan, at what point they decide to try and, get into production, who they want on their register. And everything's changing because the rules don't seem to apply anymore. How do you attract industry into a high grade but currently small scale project? Are they ever going to move upstream, as it were?
No, that will continue. That will continue. It will continue quietly. Then it'll gather a pace. But as I'm sure you're well aware and have seen it in the past in your experience, that when you do have some weakness in the market, you don't have a lot of incentive from the larger entities to make moves, because they're looking at the price and looking at what their investor response is going to be if they start chasing development stage projects. So it's just a matter of time. But to come back to the question of share register and managing that, part of this trend, the capital raise that we completed in mid-May to bring in the $2.3 million, that was a shift in ownership. That was a shift in the share register. That was bringing in alignment with the long-term plan, with the long-term strategy of NorthX Nickel. And that's to add nickel units to Grasset. That's to add nickel values to the existing portfolio in Sudbury, and perhaps we'll do an optimization. But we've got that alignment, and that's there, and that will be be demonstrated over as the next few weeks and months as we move things forward. But we've got that alignment, so that addresses that, and it's just a matter of time that we do our work, we add that value, and that will ultimately get reflected in the share price in due course.
So it kind of feels like share price is out of control. It's the what you do, it's what your team does, what you decide to do, and what you discover. What would you point people to? Okay, because if industry is not going to be contrarian about it, why the heck should retail investors? So what would you point people to and say that we are close because what?
Well, we are close. I think because we were all aware. So I think from an investment case, when putting an investment case together, I think the key question is, okay, what have I excluded from this investment case? And I think the investment case for the nickel market right now has been overly pessimistic on this flood of, let's call it, toxic nickel.
Are you talking about Indonesia?
I'm talking about Indonesia. Indeed. Yeah, there's no other way to say it. Like, it's just a bizarre. It's not bizarre. It's understandable situation. Certain segments of the world, the growing world, needs nickel, and they're in I would argue, indifferent to the cost of that nickel and the process and the destruction and it's just the industry is speechless. So I think
need you to speak. I need you to speak though, because we talk about this on our kind of weekly nickel show with Mark Selby over at Canada Nickel. We talk about the Indonesia factor, and we talk about clean versus green, and whether or not Indonesia will flood the market. And say it may well do, but it's only going to be. It's not something that OEMs, car manufacturers, can jump into if they feel that they don't understand the kind of the source and how that nickel was made. So I suspect we're going to say the same thing here. I do believe there's perhaps a bifurcation of market, and maybe not in terms of source or only source, but perhaps pricing as well, if it's the right type of nickel, because the West doesn't seem to have too many options on the table, and there aren't too many players either. So coming back to this contrarian thinking is, I just want to understand why you versus the next guy. That's what I'd like out of this meeting.
So for us, we've got high grade nickel sulfide, so low carbon footprint. We're in Quebec, the hydropower, and again, similar to many of the other Canadians. But when we look at coming back to this toxic nickel or the dirty nickel, or there's other words for it, but when if the developed world, if the consumers of nickel, if you do a full life cycle analysis, full cost analysis, including the environmental degradation, you're back to a great extent Canadian nickel to promote Canada. We've got the Sudbury camp. We've got a number of our peers that are active in Ontario and Quebec, and you come back home. And so I think, coming back to the investment case, what's not in the model is a full understanding of where half the world's nickel units are coming from, in Indonesia. And when you consider that, what's it going to take? I don't know what it's going to take, but we're probably getting there sooner. If you could have environmental groups shut down effectively Cobre Panama, a world-class copper mine with world-class approach to environmental management, and make that a headline story with Leonardo DiCaprio, and you can't see something which is multiple times, not even on the same page in Indonesia, where this nickel is coming from. You've just got to give your head a shake and say, okay, what are we doing here? Well, there's a bit of a mismatch. So yeah, coming back to the Canadians, you have high grade nickel, you've low carbon footprint for the most part. And some companies have the ability to do the carbon capture, which is, fantastic. But that takes you away from where the nickel price is right now, a little over, I think in pounds, not tons, but a little over $7 a pound, and that price is materially higher. And then so I think when these OEMs are looking, and eventually they will be forced to look very hard, you come back to where is this nickel going to come from for the long term that is cleaner, is greener, so to speak, and that's Canada.
Okay. So that's the Canada pitch. I want to hear your pitch. I said we can get through to the other side. We will be at the table to play this game when the time comes. I mean, how do you manage that process, and how do you persuade people listening, watching, reading this that you're going to be part of the team who's going to take advantage of the market?
Yeah, well, we have the project. We like our Grasset project is arguably the best high grade nickel sulfide project in Canada, and we're on the edge of moving this thing onto the radar screens. And that radar screen aspect is that 200,000 tons of contained nickel, and we're halfway there. And then when you start looking at, okay, we've got 23 kilometers of a very favorable trend, which is underexplored. And our Grasset deposit is just the first of many. And then there's follow-up with some of the geophysical targets that we've identified for drilling. Grasset will just be the first. It'll be the first of many. So we've got this size and scale opportunity. And then when you start looking at all risks considered, and this comes back to, what's the value of a project? The value of the project, the tons and the grade. So we've got the grade, we're adding to the tons. And then when you start looking at what is available infrastructure, what's the source of power? We're in Quebec, we're off the highway. And then when you go into the project execution aspect of it, you're looking at the metallurgy. Is it complicated? Is it novel? Is it energy intensive? Ours is the work that's been done, it's a conventional flow sheet, very, very simple. And then coming back to the political aspect, we're in the province of Quebec. We've got phenomenal relationships with our First Nations communities. And Quebec is pro-mining, and the communities are pro-resource development. There's a tremendous opportunity for those companies that are in Quebec, because there's an alignment that we can move projects forward much easier than in many other places in Canada. So we've got tons to grow. We've got the grade already, that's proven, and then we've got some very obvious targets that will be adding to that resource. And then along our 23 kilometer trend at Grasset, there's multiple targets. So we're target rich, so to speak.
Okay, well, we are following you with great interest. We'll see how you get on. What you managed to pull out of the bag, and as you say, deliver some of those things you just stated. So, Tom, thanks for your time today.
Thank you very much, Matt. Appreciate it.